The U.S. stock market is currently closed, as the time is Sunday, October 12, 2025 in India. The last available closing price for Rezolve AI PLC, NASDAQ RZLV, was $5.13 on Friday, October 10, 2025, reflecting a significant daily drop of minus 11.25% from its previous close of $5.78, with the price action seeing a wide intraday range between a low of $5.07 and a high of $5.98. Now, here's the twist that most investors missed amidst that sharp decline. The significant volatility and the high trading volume of nearly 30 million shares on Friday weren't a sign of fundamental collapse, but rather the market digesting a flurry of highly aggressive corporate actions, including 2 substantial acquisitions and a major shareholder transfer, all announced on or just before that closing day. While the headline screamed double-digit loss, the underlying narrative is a company rapidly building out an intricate infrastructure of AI, data, and digital asset payments, signaling a calculated acceleration of their long-term strategy that the market's initial reaction completely misread. This company isn't just selling AI software, they're strategically assembling the foundational components for what they call the age of agentic commerce. The common expectation for a stock like Rezolve AI PLC, or any high-growth, high-volatility AI name that's recently come public through a SPAC, and RZLV did just that, is that it's an incredibly high-risk, high-reward bet prone to massive swings on little news. Investors see a stock that hit a 52-week low of $1.07 back in April 2025 and then surged to a high of $8.45 in September, and they primarily trade on momentum and fear. They believe the price movement is dictated almost entirely by retail trader sentiment, the short interest ratio, and the general enthusiasm for anything with AI in the name, similar to how many trade Tesla stock. However, the reality of RZLV's recent price compression is far more complex and tactical than simple speculation. The steep drop on Friday was a function of 2 immediate pressures colliding. First, the dilution confirmation from the foundational acquisitions of SmartPay and Subsquid for a mixture of cash and 1 million shares, which, while described by the company as minimal, spooked some traders. Second, the announcement of a large shareholder transfer of 10.6 million shares from a founding estate to a new global institutional investor, an event that, regardless of its underlying stability, is often interpreted by the market as a supply overhang triggering automated selling. This isn't just noise, it's an institutional shakeup happening in real time. This combination created a perfect storm for a violent price correction that overshadowed the actual strategic value of the news. Let's unpack the recent trading action because that's where the real story is. The stock's current trajectory is all about absorbing massive institutional and M&A activity. Just in the past 2 weeks, Rezolve AI PLC has been a hurricane of corporate announcements. They not only closed the SmartPay and Subsquid acquisitions, which are intended to provide the data and digital asset payment rails for their platform, but they also issued a powerful rebuttal to a short seller report, clarified an SEC filing to assure investors there was no immediate dilution risk from a previous capital raise, and most significantly, they announced a massive boost to their financial guidance, raising 2025 annualized recurring revenue, ARR, to $150 million and initiating $500 million ARR guidance for 2026. This shattering of analyst forecasts in early October actually caused the stock to gain ground initially, pushing it toward that recent high. The price is now pulling back to consolidate those dizzying gains as the market tries to decide whether to believe the sensational growth figures or panic over the recent wave of stock transfers and acquisition-related share movements. The immense volatility represented by the stock's high beta coefficient of 2.18 means that in a general market downturn, like the one the NASDAQ was experiencing in late September, early October, RZLV will drop twice as hard. This isn't a stock for the faint of heart or for someone relying purely on a Schwab Intelligent Portfolios approach. It requires active, sophisticated tracking, similar to what you'd see on the Interactive Brokers platform. The average trading volume is now exceptionally high at over 38 million, nearly double what it was just a few months ago, confirming that institutions are actively trading around this news flow. The stock's movement is fundamentally tied to the success of its aggressive growth by acquisition model, which has been front-loaded with news to capitalize on the AI sentiment, but which now faces the scrutiny of execution. Zooming out a bit, To understand where Rezolve AI PLC stands, we need to know what they actually do. This is a UK-based pure-play AI company focused squarely on the retail sector. Their core product suite, called Brain Suite, features a proprietary large language model called Brain Power. This isn't a generalized LLM like those running behind Google or Microsoft products. It's specifically engineered for retail and commerce, powering solutions like Brain Commerce for personalized shopping experiences and Brain Checkout for instant one-touch purchasing across all channels. They essentially sell high-margin, subscription-as-a-service products to large enterprises. Clients include companies like Ferrero, H&M, and Urban Outfitters. The recent acquisitions are crucial context here. SmartPay brings digital asset payment infrastructure with over $1 billion in annual USDT transaction volume, and Subsquid provides decentralized data infrastructure. Together, these moves show a company not just sticking to selling software, but actively building a financial and data layer to capture more of the retail transaction value, which aligns with their vision of agentic commerce. The older reports, which often highlighted significant losses, EPS TTM of -1.22 on very low revenue, are now being completely overwritten by the new guidance, which suggests massive revenue acceleration is either already happening or is expected imminently. The expectation of this business being a perpetual early-stage loss maker is now being challenged by the reality of a 426% year-over-year revenue growth in the first half of 2025 and a very high gross margin of 95.8%, a figure that would make most Fidelity mutual funds analysts sit up and take notice. The institutional activity surrounding RZLV is a key factor that differentiates it from being just another volatile speculative online investment in the AI hype cycle. The company has recently closed a $200 million oversubscribed financing round anchored by fundamental institutional investors. This influx of capital is critical for a high-growth company operating with negative cash flow from operations, addressing the short-term liquidity concerns that often plague smaller, unprofitable tech stocks. The stock's high volatility and recent dramatic moves suggest a tug-of-war between sophisticated institutional belief in the $500 million ARR target and the short seller pressure that attempts to capitalize on the stock's recent run-up and low float. The narrative for the retail investor, particularly those using platforms like Robinhood for self-investing, needs to cut through the noise of daily swings and focus on this tension. Is the market underpricing the probability of them hitting the $500 million guidance, or is it correctly discounting the difficulty of integrating all these disparate payment and data technologies while scaling sales? This is the central question. The news flow is too positive to dismiss as pure hype, with multiple Wall Street analysts boosting their price targets to as high as $15, which is a significant upside from the current price. However, the sheer number of press releases also raises a yellow flag. Are they over-communicating to distract from underlying execution risk, or are they genuinely moving that fast? Looking forward, the future outlook for Rezolve AI PLC hinges on a few clear catalysts and risks. On the catalyst side, the company's ability to seamlessly integrate the SmartPay and Subsquid assets into their Brain Power platform will be the first major test. If they can successfully merge digital asset payments with their core AI commerce tools, they could establish a genuine competitive moat, effectively becoming a vertical software provider that also owns the transaction rail, a model that has proven highly successful in other sectors. Their partnerships with technology giants, often highlighted in their press releases, are another key catalyst. If those partnerships convert into significant enterprise contracts, the reported ARR figures will become much more believable. For anyone using Fidelity's research or an intelligent portfolio tool, this successful execution is what will move RZLV from a speculative AI stock to a legitimate growth name. On the risk side, the primary concern is cash burn and execution. Aggressive M&A and global expansion require substantial capital, and while they just raised $200 million, the high negative cash flow from operations means they will need to continually prove they are marching toward profitability. Furthermore, the short seller report, which the company aggressively rejected, can often linger in the collective memory of the market, capping potential upside. The recent shareholder transfer, while seemingly benign, moving shares from an estate to an institutional investor, needs careful observation. Any subsequent selling pressure from this new institutional holder could reinforce the bearish sentiment, creating more price instability. This is the difference between simply trading on momentum and performing a thorough, deep investment analysis, whether you're working with an individual brokerage or managing your own capital on an online investment platform. The larger thematic context is also essential. Rezolve AI PLC is positioning itself at the convergence of AI, e-commerce, and digital payments, a trend that is not slowing down. Every company from Apple stock to NVIDIA stock are placing their bets on AI being the central operating system for future commerce and daily life. Rezolve's specific focus on agentic commerce, where AI acts autonomously on behalf of the customer or the business, is a bold, high-ceiling vision. If they successfully execute this vision, the stock has the potential for significant appreciation, aligning with the analyst's aggressive price targets. If they stumble, however, the downside risk is substantial, especially given the stock's history of volatility and the nature of the high multiple valuation typical of loss-making growth companies. In summary, the expectation in the short-term market is that Rezolve AI PLC is a wild, volatile AI bet currently in a downward spiral due to heavy selling pressure and institutional shuffling.